Hi everyone! Welcome to the Chapter 17 of Intermediate Accounting 2, the Post-Employment Benefits. This chapter will be discussed by me, Ms. Len Jamie Ramos, and my partner, Mr. Vince Ian Primo, your CPAs in transit. So let's start. Before we start, let us know the technical knowledge or the objectives of this chapter. First, to understand post-employment benefits. Second, to distinguish defined contribution plan and defined benefit plan. Third, to know the recognition of defined contribution plan. Next is to identify the components of defined benefit costs. To know the recognition of current service costs, past service costs, and net interest. And finally, to define plan assets and return on plan assets. So let's start. What is employee benefits? Employee benefits are all forms of consideration given by an entity in exchange for services rendered by employees or for the termination of employment. Pag sinabing all forms of consideration, it is not only money, but anything that the employer gives the employee. Like for example is house, property, or expenses like travel expenses, and many more. And matatanggap to ng employee because he or she rendered a service and dahil sa termination of employment. The employee benefits include post-employment benefits na kung saan dito tayo magpo-focus sa chapter na ito. Second is short-term employee benefits, 12 months, period yung pinagbabasehan. And next is other long-term employee benefits, and the last one is the termination benefits. Yung termination benefits, nakukuha ito ng employee if yung employer yung nag-decide ng termination ng employee. And pwede rin naman na employee yung nag-decide dahil sa choice na binigay ng employer. So here, guys, the post-employment benefits. What is post-employment benefits? These are employee benefits other than termination and short-term employee benefits, which are payable after completion of employment. Itong post-employment benefits, hindi siya nakukuha ng employee dahil sa pag-terminate ng employer, yung sinabi natin kanina. Ito, nakukuha siya through natural process na natapos na or na-complete na yung employment ng isang employee. So, ano yung makukuha niya? First, pwede yung retirement benefits such as pensions and lump sum payments on retirement. Pangalawa, we have post-employment life insurance. And last, we have post-employment medical care. Now, contributory plan. Dito sa contributory plan, sinasaad dito na both employer and the employee make contributions to the retirement benefit plan. So, I made this graphic representation para mas maintindihan natin. So, dito sinasabi na yung employer tsaka employee, pareho sila nagko-contribute dun sa magiging retirement benefit plan. So, dito naman, hindi kinakailangan na pareho sila ng amount na i-contribute doon sa benefit plan. Non-contributory plan. Dito sa non-contributory plan, ang pinagkaiba niya sa contributory plan, dito only the employer makes contributions to the retirement benefit plan. Ito ulit yung graphics representation. So yung employer ang magko-contribute lamang sa retirement benefit plan. Here is the difference. Ayan. Contributory and non-contributory. So here we have another term to define, funded plan. So what is funded plan? This is when the entity sets aside funds for future retirement benefits by making payments to a funding agency. So dito, ibig sabihin, yung entity, nagse-set aside sila ng fund for the yung mga magre-retire na employee para sa benefits nila sa funding agency. So, ano yung mga example ng funding agency? Ito yung trustee, bank, or insurance company. The other one is unfunded plan. So, what is unfunded plan? The entity retains the obligation without the establishment of a separate fund. So, dito, hindi ibig sabihin na walang third party or funding agency, wala na silang fund para do sa retired employees. Pinagkaiba niya lang sa funded plan, walang ang third party or walang funding agency, pero yung entity, magpa-provide pa rin sila ng obligation nila. So, ito, para mas makita natin ng maayos, funded plan with funding agency involved. Let's proceed to the classification of post-employment benefit plans. We have two classifications. The first one is defined contribution plan and the other one is defined benefit plan. So, defined contribution plan, it is a post-employment benefit plan under which an entity pays fixed contributions into a separate entity known as the fund. Defined benefit plan is simply defined as a post-employment plan other than a defined contribution plan. So we can further understand, here are some definitions of defined contribution plan and defined benefit plan. So as a defined contribution plan, the entity makes a specific or definite amount of contribution. The contribution is definite, but the benefit is indefinite. So dito sa defined contribution plan, yung fixed or yung sigurado, yung definite ay yung contribution ng employer or ng entity. So dito nakabase yung i-contribute nila pwedeng sa income ng employer or pwede sa earnings ng employee. So, it means na yung employee yung nag-bear ng investment risk. While on defined benefit plan, the employee is guaranteed a specific or definite amount of benefit. The benefit is definite but the contribution is indefinite. So dito, yung definite ay yung matatanggap ng employee. So the entity assumes the investment risk. Hanggat hindi pa sufficient yung natatanggap ng employee, yung entity, kailangan nila i-provide yun sa employee. So, yun yung pinagkaiba ng defined contribution plan tsaka sa defined benefit plan. At isa pa, sa defined contribution plan, kapag once na nakapag-contribute na sila para dun sa employee, is tapos na yung obligation nila dun sa employee. Now, the multi-employer plan. So let me read the definition. It is a defined contribution plan or defined benefit plan that pools the assets contributed by various entities that are not under common control and uses those assets to provide benefits to employees of more than one entity. So, kita naman sa word na multi-employer, ibig sabihin madami yung employer. Ang nagko-contribute para sa benefit ng employee ay madaming entity. Post-employment benefit plans under the law. The first is yung Social Security System. Ito ay matuturing na defined contribution plan. The entity's obligation is limited to specified contributions to the plan as a percentage of salary. Di ba dahil yung SSS, nakabase siya yung percent ng sinasahod ng isang employee. Yung next naman is yung RA Republic Act 7641. Ito ay isang defined benefit plan. The entity's obligation is to provide specific level of benefit every year of service. We are now on the accounting for defined contribution plan. So, ito yung mga kailangan lang nating tandaan. Sa contribution, nire-recognize natin as expense. Dito yan sa defined contribution plan. And kapag yung may unpaid contribution, we recognize it as accrued expense. While in the pag may excess contribution, we will recognize it as prepaid expense. For the disclosures of defined contribution plan, the amount recognized as expense for the defined contribution plan, and the contribution to defined contribution plan for key management personnel. Now, we are in the illustration for the defined contribution plan. So, let's read the problem. An employee is a member of the Faculty of Accounting at a certain university. During the current year, the employee earned 600,000 pesos. The employee is covered by the university's defined contribution plan, which requires the university to contribute the equivalent of 5% of the employee's salary for the current year to a trustee, assuming yearly contribution. So, paano natin yung magiging journal entry natin para dito? So, ang sabi, 5% daw ng salary ng employee. So, 600,000 yung salary. So, ang 5% nun ay 30,000 pesos. We will record it as employee benefit expense, debit, for 30,000 pesos, and credit cash for the same amount of 30,000 pesos. As I said earlier, kapag sa defined contribution plan, nire-recognize yung contribution as an expense. Here is another illustration. On January 31, 2022, an entity paid 100,000 pesos contribution to a defined contribution plan in exchange for services performed by the employees in December 2021. So we notice here na yung service ay nung December 2021 pa, and then yung contribution ay nung January 31, 2022. So there is accrued payable. So first, to record the accrued benefit on December 31, 2021, we credit employee benefit expense for 100,000 pesos and credit accrued benefit payable for 100,000 pesos. So, unlike sa illustration na nauna, na kinredit agad natin siya sa cash, kasi dito, sa illustration natin ngayon, nauna yung services niya last year pa. Pero yung contribution ay 2022, January 31. So, for the second entry, to record the payment of the contribution on January 31, 2022, we credit accrued benefit payable for 100,000 pesos and credit cash for 100,000 pesos. So, ayun, nung nakapag-contribute na, actual na nabigay na yung cash on January 31, ito na yung naging entry natin. Another illustration, on December 31, 2021, an entity paid 200,000 pesos contribution to a defined contribution plan. Of this amount, 150,000 pesos is in part exchanged for services performed by the employees in December 2021, and the balance of 50,000 pesos is in respect of service to be performed in 2022. The contribution to the defined contribution plan is recorded on December 31, 2021. Ang magiging entry natin is debit employee benefit expense for 150,000 pesos. Ito yung part na na-perform nung December. And then we have prepaid benefit expense, 50,000 pesos. Ito naman yung service na hindi pa na-perform. So, sa 2022 pa. So, we have prepaid. Let's move on to accounting for defined benefit plan. Obligation is measured on a discounted basis, and the expense recognized is not necessarily the amount of contribution for the period. So, ito, mas complicated siya compared sa defined contribution plan. So, components of defined benefit cost. We have service cost, net interest, and remeasurements. Yung service cost and net interest sa profit or loss siya, while yung remeasurements is sa other comprehensive income. Actuarial valuation method, kasi yung yung nagko-compute ng yung actuary. yung hindi yung mga accountant. So dito we have projected unit credit method. This projected unit credit method is also known as the accrued benefit method. And this is used to determine the present value of the defined benefit obligation and the related current service cost and past service cost. And current service cost. Current service cost is the increase in the present value of the defined obligation and the results from employee service in the current period. Next is the net interest. Net interest has three elements. So let's look at this illustration. The problem, at the beginning of the current year, the records show the following. Fair value of plan assets, 4 million pesos. Defined benefit obligation for 5 million. Discount rate of 12% and expected return on plan assets of 10%. So here, to compute the interest expense, yung interest expense on defined benefit obligation, yung discount rate na 12%, i-multiply sa defined benefit obligation to get 600,000 pesos. And next, to get the interest income on plan assets, the discount rate of 12% multiplied by the fair values of plan assets, which is 4 million pesos, to derive to the amount of 480,000 pesos. So, 600,000 pesos, the interest expense on defined benefit obligation, then subtract the 480,000 pesos, the interest income on plan assets, we will get the net interest expense of 120,000 pesos. That would be all for the first part of Chapter 17. Here is Mr. Vince Ian Primo to discuss the other parts of this chapter.
Thank you, partner. So, I'm Vince Ian Primo and I'm going to report the next part of Chapter 17. So, let's start with past service cost. Past service cost is the change in the present value of the defined obligation for employee service in prior periods, and it is also the results from a plan amendment or curtailment. So, past service cost is the change in the present value of defined benefit obligation caused by employee service in prior periods. This cost arises from changes in post-employment benefits or other long-term employee benefits. The change in this cost may either be positive or negative. So next is, how do we recognize past service cost? According to PAS 19 paragraph 103, an entity shall recognize past service cost as an expense at the earlier of the following dates. Una ay when the plan amendment or curtailment occurs. So, a curtailment is a significant reduction in the number of employees covered by the plan, while plan amendment naman is a change in the value of benefits payable or introduction withdrawal of a plan. So, next naman is when the entity recognizes related restructuring costs or termination benefits. Termination benefits are employee benefits provided in exchange for the termination of an employee's employment. So, let's look at this illustration. An entity operates a defined benefit plan that provides for a benefit of 5% of final salary for each year of service. The benefits become vested after 5 years of service. On January 1, 2021, the entity improved the benefit to 6% of final salary for each year of service, including prior years. So, at the date of amendment on January 1, 2021, the present value of the additional benefits increased accordingly. Employees with more than 5 years of service on January 1, 2021, 300,000. Employees with less than 5 years of service on January 1, 2021, and average period until vesting is 3 years, 150,000. So the total past service cost is 450,000 shall be recognized as expense immediately as component of total benefit expense and added in the computation of defined benefit obligation. Next is plan assets. Plan assets are comprised assets held by a long-term benefit fund and qualifying insurance policies. Ang plan assets are usually stocks, bonds, and other investments that have been segregated and restricted, usually in a trust, to provide for pension benefits. So, next naman is qualifying insurance policy. A qualifying insurance policy is an insurance policy issued by an insurer that is not a related party of the reporting entity. So, a qualifying insurance policy is a life insurance policy with a special tax status. When a qualifying policy comes to an end or is treated as to coming to an end, it is usually not subject to income tax or capital gains tax. There are certain specific conditions that a policy must fulfill if it is to be a qualifying policy. So, in addition to that, the proceeds rather of the policy can be used to pay employee benefits and are not available to the reporting entity's own creditors even in bankruptcy. So, next is, paano naman natin measure ang mga plan assets? So, measurement of plan assets. First, plan assets are measured at fair value. Yung fair value measurement, these values should be reduced by brokerage commissions and other costs normally incurred in a sale if those costs are significant or similar to fair value less cost to sell. Fair value is considered to be the most relevant information for assessing the plan's ability to pay benefits as they become due and the future contributions necessary to provide benefits promised. Pangalawa naman is exclude unpaid contributions due from the reporting entity to the fund as well as any non-transferable financial instruments issued by the entity and held by the fund. Next naman is are reduced by any liabilities of the fund that do not relate to employee benefits, for example, trade and other payables and liabilities resulting from derivative financial instruments. Return on plan assets. The components of return on plan assets include the following. First, interest, dividend, and other income derived from the plan assets. Second is realized and unrealized gains and losses on the plan assets. However, the following shall be deducted in computing the return on plan assets. Una, any cost of managing the plan assets or cost of managing investment. And pangalawa naman is any tax payable by the plan itself or any tax on investment income. Remeasurement of plan assets. The amount of remeasurement is equal to the actual return on plan assets minus the interest income on the fair value of the plan assets at the beginning of the reporting period. So, ang remeasurement naman ng plan assets ay nahati sa dalawa. Ito ay ang remeasurement gain at ang remeasurement loss. So, paano nga ba natin ma-define kung remeasurement gain or loss? So, una, if the actual return on plan asset is higher than the interest income on fair value of plan assets, the difference is remeasurement gain. While if yung actual return naman ng plan asset ay mas mababa kumpara sa interest income on fair value of plan assets, the difference naman nun is remeasurement loss. Such remeasurement is included in other comprehensive income without any subsequent recycling or reclassification to profit or loss. The remeasurement is reclassified subsequently through equity or retained earnings. So, let's look at this illustration. An entity provided the following data for the current year related to a defined benefit plan. So, fair value of plan assets beginning, 5 million. Actual return on plan assets during the year, 900,000. Contribution to the fund, 1 million. Benefits paid, 200,000. And discount rate na 6%. So, yung actual return on plan assets ay 900,000. Then, yung interest income naman on plan assets ay 300,000. And yung 300,000 ay nakuha natin sa pag-multiply ng fair value times the discount rate. Kaya naging 300,000. Then, the difference ng dalawa na yun, ayun ang magiging remeasurement gain on plan assets. So, next naman is components of fair value of plan assets. Una, contribution to the fund, interest income on plan assets, remeasurement gain or loss on plan assets, benefits paid upon retirement, and then settlement price of plan settlement before retirement. So, paano naman natin kinocompute ang fair value ng plan assets? So, ito ang example sa pag-compute ng fair value ng plan assets. Fair value of plan assets beginning, 5 million. Contribution to the fund, 1 million. Interest income, 300,000. Remeasurement gain on plan assets, 600,000. So, lahat ng given na yun ay ipag-add natin, and then yung total nun ay magiging 6,900,000. And then yung benefits paid naman na also given din kanina na 200,000 ay susubtract natin sa value na yun para makuha yung fair value of plan assets na ending. So, magiging 6,900,000 minus 200,000 na magiging 6,700,000. So, dito naman sa baba na to, ito yung isa pang approach. Ang ginawa niya lang dito, kung mapapansin nyo, yung actual return na given dun kanina na 900,000 pesos. Ang ginawa niya dito, binuo niya lang actual return, hindi niya na inati yung sa interest income tsaka remeasurement gain din na nakuha kanina. Kaya meron tayong actual return dito na 900,000 pesos. And yung result din naman nun is the same lang. So, let's move forward. Projected benefit obligation. It is the actuarial present value of all benefits attributed by the pension benefit formula to employee service rendered before a specified date based on future compensation level or future salary increases. A projected benefit obligation or PBO is the estimated present value of an employee's pension under the assumption that the employee continues to work for the employer. This information is needed by the employer to account for a pension liability but is only needed when the pension is of the defined benefit variety. So, tingnan natin yung illustration dito. So, an entity has established a defined benefit plan. The characteristics of the plan on January 1, 2021 are: una, the defined annual benefit formula is 5% of the highest salary times the number of years of service. The annual benefit is paid at the end of each year after retirement. Pangalawa, the age of retirement is 65. Pangatlo naman, the discount rate is 10%. And then ang pang-apat is the life expectancy of the employee is 8 years beyond retirement. So, on January 1, 2021, an employee is 40 years of age and has worked for the entity for 5 years. The current salary is 500,000 annually. Since ang sabi dito na retirement age is 65, it means that the employee has a remaining service period of 25 years. Assume that the current salary of the employee of 500,000 shall increase by 5% every year until retirement. So, ang tanong, how much would be the salary by the year 2045, the last year of employment, after 25 years from January 1, 2021? So, the salary for 2045 is simply computed by multiplying 500,000 with the future value of 1 at 5% for 25 years or 3.3864 or an amount of 1,693,200. So, following the defined benefit formula, the annual benefit is determined as, so, sa 1 year of service, magkakaroon siya ng 84,660. Sa 5 years naman, 423,300. And sa 30 years, magkakaroon siya ng 2,539,800. So, kung yung employee ay nag-retire at 65 years of age with 30 years of service, the annual benefit that the employee is entitled to receive for 8 years from retirement is 2,539,800. However, the employee has only worked for 5 years and has earned only the annual benefit of 423,300. So, ang tanong naman dito is, how much benefit obligation shall be recognized at this point in time on January 1, 2021? So, the answer is that the benefit obligation is equal to the present value of the annual benefit of 423,300 already earned by employee in 5 years. So, next is computation naman tayo ng present value. So, the present value of the benefit obligation on January 1, 2021 is determined as annual benefit for 5 years, which is yung nakuha natin kanina na 423,300, multiplied by PB of ordinary annuity of 1 at 10% for 8 years, which is 5.335. And then the present value naman na magiging actual value sa January 1, 2046 ay 2,258,305 ay mamultiply sa PB of 1 at 10% for 25 years or 0.0923. And then magiging present value ng benefit obligation sa January 1, 2021 ay 208,442. So, the annual benefit of 403,300 is multiplied by the PB of an ordinary annuity of 1 of 5.335 at 10% para sa 8 taon dahil ang taon ng pagbabayad ay gagawin lamang sa loob ng 8 taon mula sa pagre-retiro. Yung present value naman noong January 1, 2046 na 2,258,305 ay multiply sa PB na 1 of 0.0923 sa 10% sa loob ng 25 years dahil ang taon ng benepisyo ay babayaran lamang 25 years from that day na January 1, 2021. And on January 1, 2021 naman, ang present value ng benefits earned by the employee for service rendered during the past 5 years or 208,442 based on future salary is known as projected benefit obligation. So, let's continue the build-up ng PBO. So, itong slide nito, makikita nyo yung mga given dyan. Yung period, PBO 1 sa kada period. Then, the current service cost or the present value of the future benefits for the next 5 years ay makikita rin dyan. So, yung the annual benefit is multiplied by the PB of an ordinary 1 of 1 at 10% for 8 periods or 5.335. Kaya makikita nyo dyan yung PB of annuity na 5.335 ay the same kada year. Because the annual benefit is to be paid only over 8 years from retirement. The annual benefit is multiplied by the PB of 1 at 10% because the benefit is discounted from the end of 2045, which is the year of retirement. Thus, the 2021 benefit is 24 years away from 2045 and discounted for 24 periods. The 2022 benefit is 20 years away from 2045 and discounted for 23 periods, and so on. So, let's observe the following build-up of the projected benefit obligation for the succeeding 5 years. Sa year January 1, 2021, yung PBO niya is 208,442. Then sa ending year naman na yon, na yung current service cost ay 45,844 and then yung interest expense is 20,844. Kapag pinagsama-sama yon, kasama yung PBO ng last PBO na given, ayun yung magiging PBO ng current year. So, the interest expense is 10% of the beginning balance. Thus, for 2021, 10% times 208,442 equals 20,844 and so on. So, yung pagka-times ng 10% sa PBO, para makuha yung interest expense, ay ganun lang din yung gagawin sa iba. The PBO is equal to the beginning balance plus current service cost and interest expense. Thus, on December 31, 2021, 208,442 plus 45,844 plus 20,844 equals 275,130 and so on. So, ganun lang din yung gagawin para makuha yung PBO ng mga succeeding years. Obviously, the projected benefit obligation on December 31, 2025 after 5 years from January 1, 2021 is 671,317. So, next topic naman ay actuarial gains and losses. Actuarial gains and losses are changes in the present value of the projected benefit obligation resulting from experience adjustments and the effects of changes in actuarial assumptions. Actuarial gains or losses refer to the differences between an employer's actual pension payments relative to the expected payments. So, what are the causes of the actuarial gains and losses? Yung causes nun, una, unexpected high or low rate of employee turnover, early retirement or mortality and increases in salary. Pangalawa, change in assumptions concerning benefit payment options. At pangatlo naman ay change in discount rate. So, actuarial gains and losses do not include changes in the present value of the PBO arising from the introduction, amendment, curtailment, or settlement of the benefit plan. Such changes result in the past service cost or gain and loss on plan settlement. Next naman ay assumptions. Una dito is actuarial assumptions are an entity's best estimate of the variables that will determine the ultimate cost of providing post-employment benefits. Yung actuarial assumptions shall be unbiased and mutually compatible. Unbiased, ibig sabihin, if they are neither imprudent nor excessively conservative. Mutually compatible naman if they reflect the economic relationships between factors such as inflation, rates of salary increase, the return on plan assets, and discount rates. Actuarial assumptions comprise of demographic assumptions and financial assumptions. So, dito muna tayo sa una, demographic assumptions. It deals with mortality rate of employee turnover, disability, early retirement, proportion of plan members eligible for benefits, and claim rates under medical plans. While yung financial assumptions naman, it deals with discount rate, future salary and benefits level, future medical costs, and taxes payable by the plan. The discount rate shall be determined by reference to market yields at the end of reporting period on high-quality bonds. If there are no such bonds, the market yields on government bonds shall be used as discount rate. Yung projected benefit obligation naman shall be measured on a basis that reflects estimated future salary increases. Next is remeasurement of projected benefit obligation. The actual benefit obligation ay mas mataas kumpara sa estimated amount. Ang difference nun ay actuarial loss. While kung yung actual benefit obligation naman ay lower than the estimated amount, the difference is an actuarial gain. This simply means that sa loss ay kapag yung projected yung PBO nila ay ma-increase and yung increase na yon ay recognized as an actuarial loss. Sa gain naman, this simply means that the projected benefit obligation has decreased and the decrease is recognized as an actuarial gain. So, let's look at this illustration. Una dito ay actuarial loss. Yung PBO actual niya is 6 million and yung PBO estimated 5 million. Magkakaroon siya ng actuarial loss na 1 million dahil yung actual na PBO na na-receive nila is 6 million pero yung estimated lang nila is 5 million. So, nagkulang sila ng 1 million kaya magiging actuarial loss siya. Ibig sabihin dito, kung yung actual obligation ay higher than the estimated amount, the difference is an actuarial loss because there is an increase in the projected benefit obligation. Next naman, actuarial gain. Yung PBO actual dito is 8 million while yung PBO estimated is 9.5 million. Kapag yung actual obligation ay lower than the estimated amount, the difference is an actuarial gain because merong decrease sa projected benefit obligation. The actuarial gain and loss arising from a measurement of projected benefit obligation are recognized in other comprehensive income. The actuarial gain and loss are not subsequently reclassified to profit or loss but transferred to retained earnings. So before I end this discussion, I would like to leave you all a quote by Nelson Mandela. It always seems impossible until it's done. So once again, this is Vince Ian Primo together with my partner Len Jamie Ramos, your CPAs in transit. Thank you for listening.